There's a tax cash trap in the IRS. They require you to make quarterly estimated payments of your tax liability. Most of us, if we're in growing business, are either underpaying or not even paying at all. And unfortunately, a lot of CPAs aren't paying attention to this either. So, how do we plan for taxes appropriately? Make sure we're not falling into this tax trap, and making sure we're not getting stuck where we have to come out of pocket with a lot of cash just to pay for taxes we didn't expect. Remember, the number one cause for business failure in this country is a lack of cash. So what you've got to do is make sure, as a business owner, you have enough cash on hand to pay your taxes, because they're your number one creditor every single year. So how do we plan this? Well, first of all, the IRS quarters are not calendar quarters. It's important to understand that you have to make quarterly estimates by January 15th, April 15th, June 15th, and September 15th of every single year. And if you don't pay at least 90% of this year's tax balance, and if you don't pay at least 110% of last year's, you're going to get hit with fines and penalties. So what do? What you've got to do is stay up on this. What we here at TGG do is we accrue for this. So this only takes, by the way, into account if you are an S Corp, an LLC, a partnership, or a sole proprietor. If you're a C Corp, it doesn't apply to you the same way. If you're a pass-through, like most of us small business owners, what you've got to do is be worried about this. So at TGG, what we do is we accrue for those taxes as an accrued distribution on the balance sheet. So rather than paying the business owner, we're going to end up paying the IRS, but we're going to accrue for it so that we see this liability, this negative number that we're going to have to pay out is coming at us. I made the mistake about 15 years ago in one of my first businesses not to do this. And all of a sudden, March came along and my CPA says, hey, guess what, Matt? You owe a couple $100,000 in tax that you weren't expecting. I said, what on earth happened? I thought we were staying up on this with paying estimated. Yeah, but you made more money than we thought, so oops, you're going to have to do this. Well, I had already baked into my business plan that I was going to hire 2 new people. Guess what? Plan's gone. Can't hire those people, can't expand the way I wanted to because I didn't plan effectively for that tax cash trap. That's why I call it a trap, because not many of us are aware of it. And if we don't keep up with those accruals and make sure that we have it on our balance sheet and in our financial statements, and then make sure we're having those meetings with our CPAs to get the right amount paid, you can end up in the same situation I was in. And all of a sudden, unexpectedly, owe hundreds of thousands of dollars to the IRS. So plan effectively, quarterly meetings with your CPAs, pay those taxes quarterly, and accrue for them monthly to make sure you don't get stuck in the tax cash trap.